Most people think a credit score is just a number that decides whether a bank gives you a credit card. But that's not what it really is. Your credit score is a financial reputation system, a system that quietly decides where you live, what you pay, and sometimes even where you work. And most people never question it. A credit score is supposed to measure one thing: risk. From a bank's perspective, the question is simple. If we lend this person money, will we get it back? To answer that question, financial institutions created a scoring system, a mathematical model that predicts behavior. Not who you are, but how you behave with debt. Most scoring systems analyze 5 main factors: payment history. Did you pay your debts on time? Credit utilization. How much of your available credit are you using? Length of credit history. How long have you been borrowing money? Credit mix. Different types of loans and credit accounts. And new credit. How often you apply for new borrowing. Each action leaves a signal, and those signals form your financial profile. Originally, credit scores were created for banks. They needed a faster way to approve loans, instead of manually checking every applicant. But once the system existed, other industries adopted it. Landlords began checking credit scores. Insurance companies started using them. Even employers sometimes review them. What started as a banking tool slowly became a life filter. A low credit score doesn't just mean higher interest rates. It can mean higher insurance premiums, difficulty renting an apartment, security deposits on utilities, rejected loan applications, or paying significantly more for the same things. 2 people can buy the same car, but one might pay thousands more, just because of a number. The credit system has a strange rule. To prove you're good with debt, you have to use debt. No credit cards, no loans, no credit history. And without a history, the system doesn't trust you, even if you're financially responsible. In other words, the system rewards people who participate in the debt economy. For most people, credit scores operate quietly in the background, invisible but powerful, influencing the loans you qualify for, the apartment you can rent, the interest rate you pay, even the cost of your insurance, and sometimes even job opportunities, all shaped by a system most people barely understand. Your credit score is not just a number. It's a prediction, a system that tries to guess how you behave with debt. And the higher the score, the more doors open. Loans, apartments, better interest rates. Because in today's financial system, access to money often decides access to opportunity.